Welcome back to the Keys to Success podcast. You have your host, Talisa Stubbs, in the house. What is going on, everybody? I have my other host, Deva Douglas. How's it going, Deva? How's your week been this week?
It's going really good, busy, and I love it.
I know, right? Like, if we're not busy, are we really even working? Like,
Right,
seriously.
right.
And today, I'm really excited because I've got a friend and a mentor of mine, Harriet Baldwin, here today. And Harriet is just like a wealth of information. Oh my goodness! Every time I hear like anything that you've done, Harriet, I'm just like, oh my God, how do you do it all? Like, I have no idea. But I'm so glad to have you here today. Deb and I are excited to learn more about you and your journey. And so let's just kind of just kick this thing off by you just introducing yourself. Who is Harriet Baldwin?
So yeah, I'm so glad to see you guys again. I'm happy to be on your podcast. I am a real estate investor in upstate New York. Been doing this for a little over 10 years in this market and 15 years overall. Before that, I was in Wall Street for 15 years. So I got a little bit of this and a little bit of that. Passionate about offering people housing options. We focus in our area on market-based affordable housing and also on lease options. So giving people that wouldn't otherwise have a path to homeownership a way to get there. And in our area, that doesn't cost any more than just rent the same house would. So it's kind of exciting to be able to bring everybody together like that.
Wow, that is neat. Deborah, do you have a question for?
I'm just like Wall Street and then investing. Like, how does one decide? You know what? I don't want to do Wall Street anymore. What did you do in Wall Street?
So I was a sell-side analyst. I covered companies. I was one of those talking heads on CNBC at times. And what happened was I joke I missed a meeting and became head of research at the small firm I was at. I'd been at some larger firms before that. I'm like, I'm not sure if I want to be in charge of these other people right now. So as I was starting to look around for a job potentially to shift out of there, my husband was like, well, you could come work with me. And at the time we were doing a large development in Connecticut. So it was, transit oriented, neighborhood development, mixed use, brownfield redevelopment, anything else you can think of for that buzzword. It was a big thing and it was fun to come and help him out. And that's how I got into real estate full time.
Wow, that is so cool.
Yeah, that is. So Harriet, then tell us like, okay, so your husband, he was already in real estate and he brought you along. Did he start off in the single family space or the multifamily space? Like where did he kind of get started at?
He actually started off. Oh, sorry, talk over you. I think my system broke up for a second, but he started off in the mortgage brokerage side. So, and this was many moons ago before mortgage brokers were like a big thing. So it was a relatively new space. He then became a mortgage banker. And as he went along, he would come to folks who had a house, who had some financial struggles. There weren't any financing options for them. And he would help them with creative solutions. And he sort of got into helping folks rescue their own homes. And every once in a while, one of those rescues wouldn't quite finalize and he'd end up with a house to work with. So then he would renovate that, get that sold. And that's really how he got onto the property buying, selling, redeveloping side of real estate.
Gotcha.
And that was all before I ever met him. And we've been married for over 30 years. So
wow.
Or almost 30 years. I can't count.
Wow, that's interesting. So when it comes to, because I know that you raise private money and you guys work on larger projects, but you also do single families. So when it comes to raising private money, what are some of the steps or how did you get started? And can you kind of elaborate on that a little bit more? Because I know some of our viewers are probably struggling. Some of them may be struggling with getting a hard money loan. Some of them may be struggling with just getting like a traditional or conventional loan. And so private money has really become like a hot thing. And so how does one even get started?
Yeah, so that's something, again, my husband actually got more involved in it earlier than I did. But hey, Wall Street financing is kind of related, right? So we actually, the first instance of doing private financing was for some of those deals going way back when there weren't any financing options for folks that had very little equity in a house that was still a great place to live and made more sense for them to stay there. And so he got involved in finding funds from other folks to help fill the gap with a private mortgage. That's really the way we got into this very early on. And then when the regulation came into effect that you could use IRA money to invest in real estate, he actually was pretty early in that. At one, I think, I'm not sure if it still exists, but we had an LLC called Mortgage IRA LLC for investment accounts and being able for people to use some of their retirement funds in that less typical way that could be a great way to invest in your community, get some really great returns, and help us with our projects. And then we just kept on going. I mean, our most recent thing is, oh, there's this thing called the internet. Oh, look at that. So a webinar. Actually, our latest thing. Where is it? No, that is not our book. Somewhere here, I have a copy of our book. We just published a book about the right way to do private lending.
I love that. Congratulations.
I'm looking at my book pile, but my closest copy is 30 feet that way. I'll be prepared next time.
Yeah.
Okay. But that is so neat, though. And so you're basically breaking down in the book, like beginning to end, the proper way to raise capital.
Right. How to do it right, how to do it. The way we do it is a little different than some other people do it. So just a way in one place for everybody to see exactly how does this work, and with some general guidelines and some very specific things of exactly how our program is structured.
Got it. Okay, so I have several questions. We'll start with number one. So there's a lot of investors that feel like, they're hesitant to get into the private lending side because they know that real estate is a risk. So they always worry on, if I do bring someone in that may be a novice investor, I'm the one that's the expert. And what if we lose money? Like, they have that hesitation. What would you say to that investor that they are an expert? They've done it several times. Yeah, there's risk, but what do you tell that investor?
Sure. So risk is sort of on both sides of the equation, right? So the person that's becoming the private lender, their best way to describe that risk is you are getting, and if you're doing this right, you're getting a recorded mortgage on the property behind the monies that you're lending. And that gives you security so that if the worst case happens and this just is not working at all as the project that was presented, if they have to, they can foreclose. That sounds like a headache. This happens very rarely. It does happen, right? It's not never, but it's a pretty low risk. And if that happens, your investment that you started off here, now you might have something with some costs. Maybe it's here, but you now own it, and you can resell that to somebody else. You can rent it out. In our case, because most of our properties are on long-term rentals, if a bus was to hit us and one of our investors needed to foreclose, it's written into our contracts. They can take over the leases. If they start collecting the rents, they're going to be getting paid more than we were paying them for the mortgage.
Got it.
Right. A lot of deals are more on a fix and flip basis. At this point, you would easily be able to find a contractor to come into your deal, finish it out, get that sold. And it's quite possible that as the investor, as the private lender, you're going to end up with all of the profits instead of just your fixed rate of return. It's going to be more of a headache, but your biggest risk is it's a slightly bigger headache and you're going to make more money,
Right. Okay.
That's the way I think of it. Now, obviously, if you're investing with somebody that this is their very, very first deal, well, you'd want to make sure it was somebody that you knew pretty well. But typically, as a newbie real estate investor, your first private lender is probably somebody you know, and you may even self-fund part of the first deal. Finding a first deal that's bite-sized and a really compelling deal, it's worth waiting for that you can reduce the risks significantly. Right?
Got it. And just segue into that, can you give us an example of the terms that you may set up for a private lender? Let's say this is a flip. what would those terms be that you may set up?
Right. We don't do many flips in our market. We live in a very low cost area. So our better materials don't cost less than they do where you all live. So we don't do a lot of fix and flips. But typically for a flip, it's a shorter term deal. I know the friends that we have that do a lot of those, they tend to do it as a note that's going to get paid interest either once a year or when the deal sells. Most of their deals are complete within 9 to 18 months, so that their lender is, giving them the money up front to be able to purchase the property and fund the renovation. They're getting paid typically 8% or so fixed rate of return on that money. And when the property sells, they're getting all of their principal plus all of their interest back all at once.
Nice.
And then most of the folks in that space, if their lender is like, hey, what do you mean I get all my money back? I want to keep on making that much money. They typically will have another property lined up that if they want to just reinvest again, they can keep their money at work and keep it earning money if they choose to.
Got it. Okay. I like that.
Yeah. And I just wanted to just really quick, because I had heard from another viewer of ours that sometimes we can talk on here and it can seem a little high level. And so I want to just kind of break down, what is a private money lender? Who can become a private money lender? And so, Harriet, would you kind of elaborate to our viewers who can be a private money lender? Are they banks? Are they where do we find these people?
Right. So private lenders are literally private individuals. Any human that has money could become a private lender. And depending on what investor you're working with, some folks have much smaller minimum investments. Some people have larger chunks that they require. I know our programs, the minimum would be a $10,000 investment. And we can accommodate all the way up to multiple millions, just depending how much money somebody has, how they want to do it. So say you're somebody that has an IRA. Maybe you've been at one or two different jobs and now you've got some 401k money. It may still be at your prior job. It might be at an independent place like, say, a Fidelity of the world. What most people don't know is that retirement money, which you think you can't touch ever, that's money that's yours to decide how to invest. And there's a much longer list of possible investments that are legal to put that money to work at than your average brokerage would offer you, because the brokerage is only going to give you things that they're going to make commission on. So there are actually companies out there that are completely licensed to be administrators for 401k monies that are truly self-directed. So it still has to fall into one of those allowable buckets, but this company is not getting paid. They're called custodians. They're literally just like keeping your money dusted, right? They're not establishing whether it's a good or bad investment. They're not getting paid commissions. They do have fees, but their fees are pretty low. So as an individual, if you have retirement funds, you can transfer a little bit over to one of these custodians and then invest it into real estate and get a much steadier fixed rate of return. It doesn't go up and down like the stock market. It gives a higher return than a bond does, and it's secured by real estate. There are other folks that just have what you call, regular monies that aren't tax advantaged the way retirement funds are, but the same thing. You may have a bunch of money in a savings account getting paid how much from the bank? Little tiny amounts. So you could take some of that money and become a private lender and lend it to folks that are working in real estate and get a much better return on that portion of your money. You can even if you have a cash value life insurance policy, you can put that money to work. And that's incredible because that's money you already have that's not making anything. And it could be making, 8% or more.
Right.
If you have equity in your home, you could take out a home equity line of credit and invest it with, as a private lender, and as that spread, it's, this much money you're making, but you didn't have to come up with any money. It's the bank's money. You're getting paid to invest the bank's money.
Right.
It's like an infinite return because the dollars you had to put in is zero. So there's a lot of different ways to get to become a private lender. A lot of people who didn't think they could ever be a private lender actually could be.
Yeah.
Mm-hmm.
And it's literally just by you explaining that, it's your literal neighbor, your everyday person that may
Yes.
be interested in real estate. They may be terrified or they just don't know. There's different ways that they become private lenders and slowly get a segue of learning about real estate. And then they decide how in depth they want to learn and what they want to do. So it's great to hear that everyone ideally that has a regular W-2 job, they have money that's sitting somewhere that they could potentially turn around and invest and be a private lender.
Exactly. And private lenders can be as passive. They can just write a check and not worry about it. Some people get into real estate through private lending, but you do not have to have a hammer in your hand. You don't have to find the deal. You just have to write the check and then cash the payments when you get it back.
Yeah. It's like the moment that you walk out the door, any and everybody is a potential private money lender.
And if they're not, they know somebody who is.
Right.
No, exactly. And Harriet, you know that, the private money lender that I found, I met him on an airplane, and we sat and we had a 3-hour conversation. And by the time we were done with the conversation, he wanted to invest with me. And so, and this was somebody who is an experienced real estate investor, which is great for me because he's been doing flips and he's been doing buy and holds for several years. And he's at an age now where, he's getting up in age. He's got grandkids. He doesn't want to be in the weeds anymore. He'd much rather just give his money to a younger investor and kind of guide me along the way. And so, I mean, there's just so many reasons why somebody would want to be a private money lender. You just got to get out there and just start talking to people.
Yeah.
Exactly.
Wow. So Harriet, tell us right now, what are you and your husband currently working on?
Mostly we're working on getting ready to go on vacation, but
Ooh, where are we headed?
We are going to Asia for the first time.
Nice.
But in addition, we're closing on 2 properties on Friday. One of them is a foreclosure that we're buying from the government, and the other one is a deal that was brought to us by a wholesaler, a family who has a house that they're not using anymore, but it's filled with their family stuff. So we're going to be able to step in and get both of those renovated and back into use. Both of those are vacant at the moment. So
nice. And what's the exit for those 2?
Both of those, the exit strategy would be a long-term lease with folks that would be on a path to own the property over time. Yeah.
Okay.
We've also got we bought the building across the street from our office. We have just started to manage properties for other owners. So we're now doing property management. I literally just got my real estate license. I had one in Connecticut once upon a time, but to get that to be completely legit, the building we bought the house at has an apartment upstairs that, thanks to fun with zoning, is much bigger than average. So we're thinking about doing that as a medium-term rental, possibly for healthcare workers. So that would be new for us, but hey, could be fun, right?
Nice.
And so, okay, so Harriet, so you basically do a lease to own for all your units, pretty much?
For our single family units, which is about 2/3 of our units. And then our other units are in multi-unit buildings, generally 2 to 4. Again, we're upstate New York. It's not a big city. It's a small city, even for upstate, right? So those are just straight rentals. We focus on the affordable area of the market. So we work a lot with Section 8 for our residents and other sources like that.
Wow. And so what made you want to go that route for your single family to do the lease option or the lease to own? Was that more of a personal decision, a business decision?
Yes. All of the above, right?
Okay.
So we moved up here. We'd done the huge project in Connecticut. We were looking for smaller projects that wouldn't, take over 10 years of our life for a single project, bite-sized stuff where if one blew up, we would be able to not get so excited about it,
Yeah.
right? Um, so our initially we were looking at buying and then immediately selling stuff with some owner financing. Then that got into buying it, fixing it up, and selling it with seller financing. And then with some of the changes in regulation, there were limits on how much seller financing you could do at once without needing to get a whole bunch of licenses, most of which we'd had in the past, but we were trying to keep things simple. So that's when we pivoted more to the lease with option. Really focused on, from a missional perspective, just trying to see the market and give people a path to housing stability. There's about 2/3 of the country owns their house, about 1/3 doesn't. A lot of that 1/3 thinks that they can never control where they live. There's a big space in the middle for people, even if you are quote unquote just a renter. You're still a human. You still want to control where you're living. There are ways to make that a lot bit more balanced and give the residents the power to decide when they want to move or not, and make it easier for us as landlords because they're on the path to home ownership. They're taking care of the house. We're here to support them, but they fix their own toilets.
Right.
Right?
And it minimizes your maintenance request. You don't have any more because they ideally take on
Exactly.
the ownership of the home, and they're going to take care of the home a lot better than it was just a regular rental.
Exactly.
That's beautiful. And see, I'm in the Dallas-Fort Worth area, and we have several rentals. And I think I've actually discussed this with Talisa to set up like a lease to own situation. I've talked to several other investors in the Dallas-Fort Worth, and there's always a lot of pushback. Are there any regulations or anything in upstate that's different? Because I think it's state to state.
Mm-hmm.
It is. It's a very good point. It is a highly regulated space. It is state to state. We are the way we structure ours, and most people that do rent to own tend to have a 3 to a 5 year earn out. And if you haven't purchased a house by that time, it's not going to work. Because our area is lower cost, we actually structure it a little bit differently.
Okay.
Get our book for more details, right? But so it's a 1-year lease, but it's written into the lease that the lease can renew for up to 19 additional years for a total of 20. That as landlords, we cannot non-renew the lease. If the person is in default, we can cancel it. But if they're not in default, they're completely in the driver's seat as to whether the lease renews or not. They can cancel it, but if they don't do anything, it just keeps renewing, right? We limit their rent increases to increases in taxes and insurance. Their base rent doesn't change.
Wow.
And then there's a separate piece of paper. And again, look at your own state regulations. There can be it's a separate piece of paper that gives them a 1-year option. So they pay us a fee for that upfront option. And then if they don't buy the house in 1 year, we enter into a new 1-year option agreement. So it's a very trust-based sort of thing. If they, a lot of people may move in 3 years instead of sticking around, but still they know that it was their choice of when to move, right? If it's 5 years in and somebody becomes bankable, because if they're bankable now, I tell them, I'm a banker, I send them to, right? This is for folks that the bank would say no to, but those folks in 5 years, they might be able to get a bank that says, yes, they can buy it from us at that point if they wish to. So that option keeps on renewing. The plan is if you get to 20 years and they've never been bankable or never chosen to buy us out at that point, if they've been paying their rent regular and timely, they can buy us out for $1.
Wow. That's awesome.
What?
Yeah, but in the meantime,
lease to own with you, like this sounds
right?
Like it sounds
but
so.
If you do the math, then we have the people that do the math. They're like, wait, I'm paying you $1,100 a month. If I multiply that by 20 years, I'm paying you how many hundreds of thousands of dollars for this house?
Very
Well, no, you're
true.
paying us rent. The buyout would be $1.
Wow.
So yeah, it's just how the math works in your
Yeah.
But it's designed to be very accessible.
Right.
If your choice is renting only or rent to own, rent to own gives the resident a lot more control
Got
and
it.
power in the long run.
Just to get an idea of like what your market looks like price point. So for just an average 3-bedroom, 2-bath, what's the rent in upstate New York?
So the rent in our area, finding a 3.2 would be a surprise.
Wow.
3.1s are all over the place. 3.2s are rare, right? As a
Okay.
rental.
Got it. So
For
what's
a
a 3.1
3.1,
go for?
that rental, yeah, a 3.1 rental around here would be, let's see, these days probably $1,150 to $1,300.
Wow.
Our
So
rents
your
are not as
purchase-
much lower as our asset prices are. So
Got
the average house price in our case is $100,000.
is how much?
Oh, Harriet, you
Oops, I think I froze
froze.
up.
Yep,
Okay.
you did. How much was it,
Oh,
Harriet?
I can't hear you.
Uh-oh.
Okay, I think I can hear you now.
Okay.
Yes.
Can you hear me?
Yes. Can you hear us?
Can you
No.
guys hear me?
Yeah.
No? Who knows what happened? Hold on a second.
Okay. Because this is good. Deborah, this is so interesting, though.
It is. I mean, it's beautiful. I mean, it's really great to hear that because I love that because
Let's click on the having issues button.
yeah, because if they stick it out long enough, they own the property anyways.
Right, exactly.
It's a win-win for them all the way across. Yeah.
Yeah, and
Oh,
Harriet's right about about how much they're paying. They're paying well over the purchase price
right.
by the time that 20-year mark hits. And so paying $1, that's like,
They
yeah,
paid a double.
they paid more. Yeah, exactly. Harriet, are you able to hear us now? Oh,
Don't we just love technology?
yes, we do.
This
Yes,
is what
we do.
happens when you're in the middle of it.
Yeah, but that's all right. We'll let her get her mic going.
Yeah.
But while she's doing that, one thing that I did want to mention is that if there's anybody listening who is currently working and they have a current retirement plan with their employer, you may be able to use some of those funds now and roll them over into a self-directed IRA, but you're going to have to just talk to your employer and ask them, because some of them have stipulations on, well, you can't pull the money out until you're not employed here anymore, or you have to wait 6 months or 2 years before you can roll that money. So you just need to ask your employer, and if your employer doesn't know, talk to your retirement entity and ask them. That way you know what funds you have available to invest.
Absolutely. Absolutely.
Yeah, but obviously if you're retired already and you've got funds sitting in a retired account, then you can just transfer those funds, no problem, to a self-directed IRA.
That's true. Because the more money you save, it's really just appreciating by the moment. So
Yeah.
it's better. I mean, and one thing you have to think about, a lot of hedge funds, a lot of big retirement companies, even like in the Dallas-Fort Worth area or the state of Texas, TRS, which is a teacher retirement, they literally offset inflation by putting money into real estate. So if big retirement companies that we are banking on are doing that with real estate, why wouldn't you do something of that nature just on a smaller scale?
Exactly. And then get a higher return.
Absolutely.
Yeah. So Harriet, I think we got you back.
Yeah. Sorry for my audio issues. I just went old school. It's like plug in this ancient $7 headset and I can hear you fine.
Yeah, see, that's all. It's the simplicity. It's the simplicity.
Yes.
But how much did you say that, Harriet? We didn't hear that amount. What were the homes?
So the average home price in our county is about $130,000. Yes, you heard that right. $130,000.
Wow.
In New York? Is it?
Yeah. Yeah, we're about 4 hours from the city.
Oh,
Wow.
okay. And it's like as soon as you jump into the city, that's when the prices get astronomical.
Well, and even in our area, we're kind of at the gateway to the Finger Lakes, so we call it the Southern Finger Lakes. If you have a house on the lake, that's going to cost you $400,000 and up, right? But if you're just in a regular town, nothing special, yeah, you can find a house for not very much.
Okay.
Wow.
All
That's
right.
beautiful.
It is.
If we're in Texas, we find something that's 130, we're like, I'll pick it up because I know that's so cheap to buy to do a rehab initially.
Yeah. Yeah.
Yeah.
Yeah.
No, seriously.
But
Oh, go ahead.
I'm sorry, Talisa, finish.
No, I was just gonna say I know that we're getting short on time, but I just wanted to make sure that we could ask you a couple other questions before we ended our call with you. But what were you gonna say before that, Harriet?
I was just going to say that low average price explains why we don't do so much on the fix and flip side, right? Because you buy something for 60 and you put 60 into it, and now you can get 123 out of it. That's not enough of right.
That's not good math.
Right. Gotcha.
It's like we are mission oriented, but we are not a charity.
Yes. Absolutely. Makes perfect sense. And I know one of the questions that we always ask all of our guests is about limiting beliefs. What limiting beliefs did you have to overcome to now be the person that you are now?
I'm really bad at asking people for money. I'm right. I'm very task oriented. So learning to share our story, to share some vulnerability, to tell everybody what we do, right? And to really focus on the outcomes and to be not embarrassed to make money. You know, we are helping people. We're helping both our residents and our lenders. It's fair on both sides, and that works out for everybody.
And I really feel like are we asking for money, or are we presenting an opportunity to people who would not otherwise have the opportunity to invest?
Yeah, no, we're presenting an opportunity. Definitely. Yeah. No, that's definitely the way to frame it. And I think framing is another tool that is like, why didn't anyone tell me about this years ago? Oh, look.
Yeah.
Reframing is kind of powerful.
Yes.
No, it is. It just kind of helps you to think of things in a different way. Another question, that we like to ask is, if you were to give somebody advice, a brand new investor, or maybe even your 18-year-old self, advice, what advice would you give to a new investor, new entrepreneur?
Look at what is your purpose. Get your purpose defined. Keep that really close to your heart. Put it up on the wall, right? And where is this going? It is so easy in our consumer society to surround ourselves with really nice stuff and then be in a position where we don't have the resources to take advantage of an opportunity or help somebody we want to help. So if your 18-year-old self can just find a nice, basic place to live, and then as you progress and you get raises, pretend you didn't get raised, invest that. By the time you're in your 30s, you can be pretty much independently wealthy, and your friends will be like, how did you do this? It's like, well, my car is nice, but it's not new. My car, there's a lot of choices. And if your purpose is at your center, it helps you make those choices that might be difficult for other people, and to propel you forward and to help you drag other people along with you while you're at it in a positive way.
Yeah.
That is so good.
That is so good. I love that. I love that, Harriet.
Yeah. Let your purpose be your anchor. And I'm sure every time you will win.
Yeah. Wow. Yep. That's good. I think sometimes we kind of, we're just kind of in that hustle and bustle of, I got to make money. I got to take care of my family. I got to do all these things. And sometimes we kind of lose sight of our purpose and, kind of lose sight of our joy. And I think really like honing in on that from the beginning and making that the foundation will keep you grounded throughout the process, which is something that I did not do. Do not follow in my steps. I was chasing that bag. Okay.
I think we've all done it, Talisa.
Absolutely.
And my 18-year-old self probably wouldn't have listened to me, but it's worth a try.
That's true.
No, absolutely true. And one final question, Harriet, for you. Oh goodness, dang it! I just had a brain fart. Gee whiz, Deborah, what is our last question? Oh my God.
I feel like we asked all the normal questions that we asked. I think the last one is how we get connected with you. Oh. Our viewers are listening and they're like, oh my gosh, I really want to get connected with her and learn more about what she's doing. How do they get connected with you?
And buy her book.
And buy her book.
Right? Well, the book you can find on Amazon apparently, but so our business has a website. It's like for street or southerntier.org, my own home, samthomas.org. And there's a site on there for investors. It's also where if you're looking for a rental in Elmira, that's where all of our listings are. So it's, find the right space there. And I am on LinkedIn, Harriet Baldwin, and that's Cone, like ice cream is a middle name.
Okay. Oh, you know what? And I just remember what my question was. I'm sorry, you guys.
Okay.
For people who may want to do a lease to own with you, what can they expect as far as like an entry fee goes? Or is the entry fee the same for every property, or is it based by percentage?
We have it standard across our properties. So on the leasing side, you need to come up with your first month's rent. And on the option side, at the moment, it's a flat $4,000 for an option fee.
Wow.
Okay.
Very doable.
Very doable.
It's very doable. As long as somebody thinks they're going to be in the home for 2 or more years, they can do a lease with an option. Even if they don't expect to buy it, it'll come out about even in the end.
Absolutely.
Are you connected with other investors in other parts of the other states that do the same thing?
Yes.
You are? Okay.
Yeah.
Because I'm pretty sure we've got viewers in other states that would love to do like a lease to own, but wouldn't even know who to go to, who to reach out to. So they can reach out to you.
Yeah, you can reach out to us. There are several, there's plenty of people that make their money and their living from teaching investing strategies. And there are several high-end ones that do lease option. If you just search online, you'll get all kinds of info. But yes.
Nice.
Okay.
Wow, that's beautiful.
All right. Well, that was great. Harriet, you were amazing. Thank you so much for joining us today.
Oh, thanks for having me. And thank you for your patience with my acoustical challenges. Did I mention I'm a sound engineer at my church? Oops.
This has been such an honor. We definitely have to have you back because we learned so much. And hopefully, viewers, if you have any questions, please let us know. We will get connected with Harriet again for her to join our podcast again.
Oh, yeah. I'd love to come back.
Awesome. Okay, guys, we're going to wrap it up. Thank you so much for always tuning in. Remember to like and comment and subscribe to our YouTube channel. And always leave your comments. Let us know what you want to see more of, and we will bring you the people and the content. So thank you again for tuning in to Keys to Success podcast, and we will see you all next week.
See you next week. Bye.